Welcome to Money Making Sense, the show that talks about all things money. Today, it is PPP2. That's the Payroll Protection Program, the second phase. Joining me today is Bruce Gulso. He's a partner at WSRP. We also have from WSRP, Carl Steffen, who's a director. Welcome to the show.
Thank you. Thank you.
Hopefully, we've explained a little bit about PPP 1 and 2, and if they don't run out of funds, those do expire at May 31st of 2021. But you were saying in the break that there's actually, I don't know if it's a better program or not, but we have the employee retention credit that has changed from the first time PPP1 was offered till now. So can you explain a little bit about that?
Well, the employee retention credit, when it was first introduced, it was to be used for that true loss of revenue and stuff. So you had some ways to qualify back in 2020. The first one was a 50% reduction in revenue. Well, that's changed in 2021 to where it's only a 20% reduction in revenue. But that's not the only thing that gets you to qualify. We've had customers or clients that we've had where there really haven't been significant drops in their income or their revenue, but they've had their operations curtailed by government order. And it's as long as your operation is curtailed by a government order, during that time that it's curtailed, you could qualify for the ERC credit. Now, in 2020, it was limited to $10,000 per person with a 50% application of a credit against payroll taxes. And you could essentially have $5,000 per person coming back to you in the way of not spending as much on payroll taxes, or if you had already filed your payroll taxes, getting a refund of those payroll taxes.
I'm sorry, this only applies after you filed your taxes. Is that correct?
It's while you file them, or because 2020 is already behind us, yes, you're going to file for it after the fact. And the way you file is to submit an amended 941, which is called the 941X, and you'll actually put in there the credit that you did not take before, and an explanation on the last page of you're just taking a credit that was available and you didn't take advantage then. But yes, it's through the application of your payroll tax forms that you're getting this. If you have not filed for 2021, if you have not filed your 941, you can actually take the credit on lines 11 through 13 of your 941 and get the immediate reduction of the cash from not paying the tax.
One thing I do want to explain quickly to some of the listeners who may not have their own businesses, it behooves them to actually file quarterly instead of waiting for an entire year to file. So that's what you're talking about, is at the end of each quarter, make sure you're getting the money that you deserve with your credits.
Correct. And if you, for instance, didn't file last year because you didn't know you could file last year, you can file still this year and just do that amended return. So even if it's somebody that's not filing quarterly or something, they still have the opportunity, if it's through a 940 or whatever, to claim the credit if they qualify.
Now, is this employee retention credit, is that something that's always been available or only came into being during the pandemic?
It's only during the pandemic. It's to help with the pandemic curtailment of business or the slowdown of revenues to businesses and help them through it, just like a PPP loan or any of the other stimulus programs that they put in place.
Does that include someone's 401k or IRA through work?
Not really. It's for payroll, and there are some related, but minimal related. There's some health benefit that you can add to the payroll, or some retirement, but they're very limited. It's really for your salaries.
So what else do we need to know about this employee retention credit that differs from the PPP?
Okay, the employee retention credit, let's take it for instance. With the PPP, you get a limitation of 2.5 times a payroll, and it has to be collected over that 8 to 24 week time period that you're qualifying for. With the ERC, you can qualify for all of 2019 for $10,000 per person. In 2021, it's going to be $10,000 per person per quarter and 70% credit, not just 50. So, for instance, the value proposition, if you will, for somebody that has 5 employees in 2020, they could potentially get $25,000 in cash back. Those same 5 employees in 2021 can potentially get $35,000 per quarter. Now, you can't have a PPP loan and an ERC. Whatever time period is covered by PPP loan to get your forgiveness, you have to exclude that from the ERC credit. They don't let you capitalize on both.
Yeah, when you're getting paid from 2 different people essentially for the same job.
Yeah. And so they're not allowing that. And this is intended for companies with a fewer number of employees. In 2020, it was intended for companies with only 100 employees or less. In 2021, they raised the number of employees to 500. There is an exception, though. We had a group that had 1,500 employees, and they didn't think they qualified for the ERC. But because of government order, they had employees, quite a few employees, that were working and are not working and still getting paid. And it allows for companies of any size, if they're willing to pay the employees for not working, that they can claim the ERC for that. And this particular company with 1,500 employees in 2020 got a credit of $3.8 million.
I know they get a credit for this. Basically, if I have 100 employees and I qualify for the ERC, I get a credit, so I'm able to pay $25,000 or $35,000 to them. Do I have to actually pay some amount of tax on that money I'm getting, or is it free?
The state is requiring, anyway, Utah is requiring that you pay a state tax on that. It is an income, but the federal government does not.
If I don't live in Utah, I just have to check my state requirements and see if I owe that particular state money on the ERC that I'm receiving.
Correct. It's very similar to the PPP funds where the IRS came out or I guess Congress came out in December and clearly stated that those funds were not going to be taxable at the federal level. Well, the state of Utah passed legislation that said, yes, it is going to be taxable. Each state is different. There are resources available out there online, but it's probably best to check with your tax professional, your tax preparer, to make sure that you understand the laws of a specific state. Our neighbor to the north, Idaho, their law is very ambiguous. It doesn't clearly state that the monies aren't taxable there, but through communication with some colleagues we have up there, we determined that PPP funds are not taxable in Idaho. But it's always worth checking with a professional that has the knowledge in the specific jurisdiction.
Thank you so much. Again, my guests today, all from WSRP. We had Bruce Gulso. He's a partner. Carl Steffen, a director there. Thank you so much for helping clarify a lot of this that is very confusing for people. And even if you don't have to deal with it as a business owner, you just hear these terms thrown out a lot, and it's nice to know kind of what they are and if it applies to me or not.
Thank you for having us.
Thanks for listening. You can email me with any questions or topics you want to hear about at hkelly@ksl.com. That's HKELLY@ksl.com. And because this is Money Making Sense, you can subscribe for free on Spotify, Overcast, Apple Podcasts, anywhere you listen to your favorite podcast, and you'll never miss another episode.